crash in the gold market. Gold down 9% intraday to start the new week. Panic in the precious metal sector. So in today's video, we're going to take a step back, take a deep breath, and we're just going to look at the facts. We're going to look at the charts, where we're standing. We hit the 200-day moving average today. It's wild. What are the technicals? We're going to talk about what are the market technical facts, the fundamental facts for gold. And I'm going to tell you what I'm going to do starting today, and it will likely surprise you. Let's get into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Hi, my name is Daniel Wilhelmi. Welcome to Hot Trades of the Day. If you're new to the channel, we're glad to have you. Though you look at the charts, not a pleasant way to start off, but hit the subscribe button so you don't miss any of these videos, because I'm going to go over a couple of facts that I mentioned in previous videos, and we're not going to talk about them in depth here in this video. Again, we don't have time for it. Let's jump right into the charts. I look at the charts. This is what I do. Wow. So, first things first. We hit the 200-day moving average, the golden line that you see here in the daily gold chart. That's incredible. I'm not going to lie to you, I did not think we would get there this fast. As I've said before in this channel, that was the target zone, right? Every time we've seen a gold bull market and gold went on these big time breakouts and these runs up, we have come back and retested to 200 before we started the next leg up. So we knew this is going to happen. It was just a question of when it's going to happen and at what price point it's going to happen, because the 200-day moving average is moving up sharply. Now we got the answer in today's trading. As you can see, obviously the gold price rebounded sharply as well in European trading from the 200, and it's now hovering around this Fibonacci retracement zone that I pointed out, I think at the end of January. So it's been a minute. That's why I'm saying hit the subscribe button so you don't miss videos where I point out these type of information early, because we want to be ahead of the market. Now, this is the charts. Why are we selling off? There are basically two reasons for this. The first one I pointed out before, which is most investors are using trend following systems. There is now not even no trend in gold right now. You look at the past week, we have a downtrend in gold. So clearly there were big institutions that switched from long to short. The second thing, also technical, market technical, is clearly massive stops were triggered. We can see it in the charts. Once we broke below the end of January closes right here, right? There were clearly stops below this, which was a good stop zone, by the way, because we also had this uptrend here from October. So there were clearly stops, and as you can see, triggered, then below the Fibonacci, triggered, below the second Fibonacci, and this support zone, monster trigger. I'm surprised actually they didn't try to push gold below the 200 and this uptrend to trigger even more stops. Probably didn't have it in the tank anymore. And probably the shorties started to cover, got a great profit out of it. So that's the first reason. There are no buyers in gold right now because we have no trend. We have a stronger dollar, though it's not significantly stronger, but it's stronger. And it's very obvious with the higher oil prices that we're probably going to get less rate cuts. That's short term. That's the reason why there are no buyers for gold right now. And then you have the sellers, and that's what you're going to get. One of the reasons why we have no buyers, and this is fairly new information but very important information, is that clearly hedge funds and big institutions have been selling out of gold in the past weeks. Basically since probably the first week of March. So somewhere around here. And that makes sense. And what happened? They were looking at the Iran war and saw, okay, Trump has no plan how to end this war, and this is not going to be a quick end to the war, and oil price is going to jump. And they're selling their gold, and they're switching into oil. That is the trade on the big hedge funds institutions that has been going on. And that obviously has been leading to the sell-off in gold. Now, the interesting part is we know this is happening because gold is getting hit and silver is losing a little bit more, but not much, right? If it would be throughout the whole precious metal sector, then silver would be down 8, 9, 10%, basically similar to what we saw in January. Not maybe that 30% down there, but you know what I mean. Gold goes down, silver goes on more. But that's not really happening. So this is a gold-specific issue that we're seeing right now. And this is what we're seeing. Selling gold to get into oil. And if we look at oil, that makes a lot of sense, right? I just showed you gold, if anything, has a negative trend. And now if we look, it's in an uptrend, looks pretty good, right? Now today's red candle is interesting. This could be an exhaustion sign, but overall, this has been the trade. And again, you look at the hedge funds who are looking to make profits 3 to 6 months max. For that, the oil trade is the right play. They don't really care about what's going to happen in 3 to 6 years. Right now, oil is the hot trade and gold is not. The war in Iran is going to drag on. That's good for oil, right? The Strait of Hormuz is a real issue. That's good for oil. The Ukrainians are hitting the Russian oil infrastructure like crazy. That's good for oil. So that's where they want to be. On the other hand, they were in gold before this because I profit from gold if the trend following people buy gold, plus. If the dollar goes down, I win, plus. And if all the other commodities are not working and gold is going up, everybody's going to crowd into gold, right? I hit 3 birds with 1 stone. Interest rate's going to get cut. That's good for gold. And inflation is probably going to come back, so that's good for gold. So that was the gold trade, because the beauty about the gold trade was you had a cluster of factors that were all pro-gold, and that has shifted now, right? We look at the dollar. Let me show you the Dixie right now. We see, okay, really nothing has happened in the past week in the Dixie. It's consolidating, but it had a strong up move. So clearly, that we see very clearly the downtrend from 2025, which was one of the reasons that pushed up the gold prices, that's over, right? We see this very clearly. Trust me, I don't want to see this. I'm a European, right? This means I'm going to pay more next time I go to New York. But that's the fact. Downtrend is over, bottoming formation, nice Wyckoff distribution pattern right here, right? We break significantly through parity on the higher time frames, right? Let me put this one in here as well. So we have like a 2. So you can very clearly see these are the 2 zones, right? We get over here, we close over, what is this? 1, yeah, in the Dixie. So it's a little bit, maybe parity and then 0.75. The dollar is going to go higher. It doesn't matter if it's fundamentally justified or not. It's basically a question of flight to safety. So if the dollar goes higher, everybody's buying the dollar because it's flight to safety. I don't need to be in gold. That's what the hedge funds are saying, and that's why they're selling. So how low can this whole gold situation go, and how will it play out? First things first. You will have the people that come out and tell you gold is it's gonna be the popular headline this week to catch eyeballs. Gold is gonna crash, gold is gonna go down to 2,500, the gold rally is over, that's it, it's 2011. Yeah, that's not what it is. Don't get fooled by these people. In my opinion, the majority of the down move in gold is now clearly behind us. Can we go lower than the 200? Maybe undercut this lower uptrend channel that I put in here that has been in place since January of 2025. That's a strong long-term uptrend channel. Okay, so can we undercut this? Maybe hit this FIB right here to trigger a lot of stops and then rebound? Yes, that's absolutely possible. But the majority of the down move is now behind us. In my opinion, I do not expect us to get a V rebound and be right back in the gold bull market. You don't get a crash, and you can't call it any other way, in what we saw in the past trading days, basically since we fell below the 50. And I pointed out to you in past videos how important the 50-day is for gold and for this gold uptrend. If you missed it, again, please hit the subscribe button. It helps us out. You do me a favor, which I really appreciate, but you do yourself a favor so you don't miss any of the videos. You don't get a crash like this and then don't consolidate afterwards. Especially, as I pointed out, if the sentiment is not positive for gold right now, and a lot of the fundamental factors have shifted and clearly are now pointing towards a breather until we get the continuation of the bull market. What do I expect? I expect a short-term rebound and then probably a consolidation phase. Maybe we undercut the lows that we saw today. Again, as I said, maybe we go below the 200 short-term, below the uptrend, triggering the stops, triggering a lot of margin calls, because those were clearly in the market. Whenever we get these massive corrections in gold, in silver, that is usually also involves a lot of margin calls that were probably long, leveraged, and that are now all getting liquidated. So what am I doing now? That's what maybe some of you are asking. Now, what I'm going to do doesn't mean that's what you have to do. I'm not your financial advisor. I'm just telling you what I'm going to do and what I think is a good strategy, and I might be wrong. What do I know? I mean, I'm a German Schnitzel guy. What does he know, right? I'm going to start buying gold stocks today. Now, I believe we're going to get a big time sell-off in gold stocks today when US and Canadian trading starts. And I'm going to start buying. Do I going to buy all the positions that I want to buy? No. But I'm going to start. Why? Because I know I'm not going to hit the low. As I said before, only liars and the luck of the Irish people hit the absolute low in a market with 100% of their investments. That is not the point. I want to be in on the low area, so which for me is the low plus minus 10%. Again, we cannot really pinpoint accurately where the low is going to be, because there are market forces that are going to try to push the gold price down, and we don't know if they're going to succeed. They clearly, as you saw today, they clearly push it below the FIB, the low FIB zone that I've pointed out again in the middle of the chart, the long purple line you see, and the blue support zone right above it, and they triggered a bunch of margin calls and stops. That's exactly what I'll try to do again. But they also probably try to push the gold price below the 200 today and fail, and then they covered their shorts immediately. So the absolute low in this type of market, which is ruled by algorithms, very, very hard to hit. So we just want to be in the vicinity. So I'm looking to buy and add to junior producers and advanced developers. That is what's on my list right now. Why? Because they're either producing gold already, so they're profiting from gold. Yeah, they would have profited a lot more at 5,200 compared to 4,200, but they're still going to make a lot of money. And advanced developers, there's a path where you say, okay, they're going to be in production within 5 years. At least these are the type of developers that I'm looking at. So they will also profit from the gold bull market. That is my strategy. I'm going to start getting into the market, start opening up some positions, because that is what you want to do. When there's panic on the street, that's when you want to start buying. And there's clearly panic in the gold market right now, and it probably will spread to the gold miners, and that'll give us the chance. And if you're feeling insecure and you say, oh, I don't know, I think this can go much lower now, and I saw this video that the guy says it's going to go to 2,500, and this video, the gold bull market is over. Think back to January when we had the gold run, and you said, man, if we ever get down to the 200 to prices of 4,200, you probably said, if we get down to 4,500, whatever, I'm going to buy the gold miners. Well, here's your chance. We're here now. So this is what I personally going to do. Again, I'm not saying that's what you're going to do, and we'll see how it's going to play out. And I'm fully aware that I'm probably going to be in the minus, in the red, short term with some of these positions, because we don't know where the consolidations finally is going to come to a low. But if I look medium time frame, which again, the hedge funds don't do, 3 years, I think I'm going to get bargain prices here. That is it for today. We'll talk tomorrow. I'm not going to leave you hanging here at Hot Trades of the Day when things get this crazy in the markets right now. I still wish you a great start to the new week. I'm sure it's going to be a really good week. Bye-bye.